Good afternoon, ladies and gentlemen. Welcome to the Giyani Metals Group update on and timeline to FID presentation. Throughout this recorded presentation, investors will be in listen-only mode and questions are encouraged, which can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Just simply type in your questions at any time and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and will publish those responses where it's appropriate to do so. I'd now like to hand over to CEO Danny Keating. Good afternoon.
Afternoon. Thank you, Mark, and welcome to everyone who are joining and watching this presentation. And it's quite an exciting time for the company, so it's good for us to be able to reach out and give an explanation of what we're hoping to achieve over the next 12 to 15 months. I'm just going to kick off with the presentation in front of you, and you can, as Mark suggested, send through questions as we move forward. Just an initial disclaimer in terms of forward-looking statements that we might make through this presentation. That's standard sort of practice. I think when we want to talk about Giyani, and it's a company I'm very excited about. I joined the company in April of this year, and I kind of went through the same process when looking at the company and making the decision to join, about what was so important, what was so interesting about it that I wanted to get involved in it. And I think there's a few aspects, and they're kind of summarized in this opening slide. The first part is this growing market of high purity manganese, and I'll take us through a bit of what high purity manganese is, what it's about and why it's important. But in essence, it's connected with the battery transition and the energy transition we're going through. It's a vital component in the development of EV batteries, so it has a connection with the electric car battery industry. And it's also very exciting because it's a growing component within that chemistry. So I'll come to that and why that's important. But in the industries we work in mining, to have a revenue line that's underpinned by two growth factors, one being the underlying growth in EV cars, which everyone can understand is a huge growth area, combined with an intensity of use of our product that's growing at the same time. It's kind of a double effect. So that makes the market quite exciting. The second part is when you're developing projects, you want to be in an environment where you can actually get the project developed. No matter how good or bad the project, if it's in the wrong country or in the wrong jurisdiction and you're struggling to make it move forward, obviously good projects can die in bad countries, kind of thing. And I think the project that we have, the fact that it's located in Botswana, is a huge advantage, a country that is just recently rated as the second best mining jurisdiction in the world. That was by the Fraser Institute, that does an annual survey of these sort of mining jurisdictions. It has excellent workforce, it has lots of skills, it has a great tradition of mining in the country and a very positive mining tradition. So we're very excited about being able to not only having a good project in a good market, but being in the right country is absolutely essential. Strong economics, as I said, having a good project. We've just recently done some updates to our economics. What we've continued to identify is that we still, in our minds, have a low capex project. That's 281 million capex. We believe that's very important in a world where we're trying to finance projects, and being able to maintain and raise the money for that capital project. I think if capital gets too high, that can become a difficult process. And underlying that is also what we see as very strong value in terms of measured by the net present value there at 8%. We have $1 billion US project with very strong returns. And that's our base case. We have options to expand and double production, which obviously yields, as a brownfield expansion, a great deal of value. I'll get into a bit more of that detail later, but I think that again underpins the tremendous value we have here for a very modest capital amount. If you look at often people look at the rule of thumb of a ratio of capital to NPV values. And importantly, again, I'll discuss some of the financing, but we've just close to completing a financing and a funding round. We're introducing a new funder into the business, the Industrial Development Corporation of South Africa. We announced that last week. They're investing up to $16 million equivalent into the project. It's both obviously very important in terms of the funding that's coming in, but I think we can't underestimate the value of having the likes of that group backing the business, particularly as we move forward towards raising and getting prepared for project capital development. I think that's very important, and we look forward to working closely with them as a partner. We're also raising a further 10 million. That's part of the announcement for those of you that saw the announcement. So a total of 26 million, 16 from the IDC and another 10 from another party. We're at the very advanced stages with them, the last final legal documentation. And so we hope to be able to complete that very shortly in the next few weeks. What does that mean? That then basically with funding, we're able to take ourselves through to over the next 15 months through to what we call an FID decision, the decision to then sort of proceed with the plant. It allows us to move forward with our demonstration plant. Again, I'll give you a bit more information on what the significance of that demonstration plant is, but also allow us to do some work in terms of offtake customers, as well as an updated feasibility study. We're optimizing the feasibility study based on new information we have, not only from our demonstration plant through next year, but also for those of you that do follow the company, you'll have noticed that about 6 months ago, we tripled the scale of our resource, and we want to be able to include those new factors, which are very material for the business, into this new feasibility study. Demonstration plant itself, that's been a fundamental strategic asset or process for us as a business. The demonstration plant, there's a graphic to the right-hand side of this presentation. If you have a look at it, in terms of demonstration plant, we call it a full-scale plant, as this is a plant that's over 150 meters long, 15 meters high in terms of those crystallizers. It's a very large plant. It's not a desktop study. And the purpose of this is we want to be able to demonstrate to off-takers, to our customers, that we can produce the quality product that they wish to purchase, and also de-risk our process flow sheet, and literally demonstrate to both our investors, our lenders, and also the customers that we're able to deliver the product when we build the commercial plant. The plant is located in Johannesburg currently, but the larger commercial plant will ultimately be built in Botswana. So in summarizing there, and we'll get into more detail, we do believe we're in the right space in terms of the critical minerals sort of projects. The high purity manganese is definitely on a growth trajectory. We're in an excellent mining jurisdiction, and through our demonstration plant and the developments and some of the work we're going to do over the next the next 15 months, demonstrate that we're at the forefront of our industry and making sure that we stay ahead of everyone else in the development of our project. I'll just touch a bit on the market and what it means, what high purity manganese is, and why it's important. I think everyone is aware of the quite incredible increase in the number of electric vehicles that have been produced and sold in the last few years. Incredible growth, and this is expected to increase even further. Obviously, as a lot of countries move towards net zero targets and eliminating internal combustion engines over the next 10 to 15 years. As you can see, these graphs, and this is just one selected from Goldman Sachs, but you can go and you can find lots of different sources. They all show the same story, an incredible growth in terms of the amount of sales. By 2030, and that's kind of the date that we often sort of just focus on in terms of bringing the plant in, we're sort of seeing that a third of, or 30% of vehicles worldwide will probably be electric vehicle sales at that time. So an astounding growth trajectory on that basis. What's important for manganese, and what is it? So manganese, or high purity manganese, is just a form of manganese that we process it requires a lot of processing to be produced into a very high specification, high specialty product. Any product that goes into the battery space has to be incredibly high chemistry. And so it's a very niche area. We're very much other people might have seen manganese businesses that have sold product into the steel industry. This is not the same. That's a very high volume, low margin business that results mostly around transportation of production. What we've got here, it's a niche. It's a far smaller volume, but it's a very, very high value commodity and product when produced. Importantly, why is it important to the battery industry? Well, one of the key elements is that the manganese stabilizes the battery chemistry. We've seen that within the nickel and sort of aspects, and so we have seen a move from what was traditionally and historically there was a lot of LFP batteries. A lot of those were made in China, and that was the starting point of a lot of battery chemistry. But as the demands on these batteries has increased, particularly the range and anxiety as it's defined, people wanting to know that they can charge their cars quicker and drive them in the same way as they did their diesel or petrol vehicles. The element of manganese has started to come more and more into battery chemistries, and is expected to be a key component of all battery chemistries going forward. So there's a list of that we show in terms of all the chemistries and the dominance of manganese type chemistries. And this is again why we're very focused on the fact that not only do we have an increase in terms of EV sales, but the manganese intensity of use within those batteries is increasing. So from a thematic and from a revenue sort of line, we're seeing a very huge sort of growth potential. This is combined with a third aspect, and that's driven by legislation. I think we're all cognizant of the fact that most countries, in a lot of instances, particularly around critical metals, people are concerned by a single supplier of any of these products, and different countries are enacting different legislation. We've highlighted here both the US and the EU, but there's other countries that are enacting a similar sort of legislation that tries to reduce dependence on a single source supplier. It kind of makes sense. I suppose we'd all do it in our own businesses, and so as countries, I can see why this kind of drive is there. The important part of why that helps high purity manganese is that currently over 90% of the material is produced in China. And so what we're looking at, if the growth that we're expecting in the market is to come through, almost all of substantive amounts of new production has to be created in the rest of the world. So it's all new production that has to come in that regard. If we look a bit closer at the Inflation Reduction Act, we're seeing that within the US by 2030, almost none of the material that goes into batteries can come from what's defined as foreign entities of concern, and those countries include Russia, China, Iran, and North Korea. So that's a very important aspect. Similarly, within the EU, the Critical Raw Materials Act, which defines that no more than 65% of any strategic material should come from a single country. So when we look at these kind of numbers, we start to see that. And I think if I go to the next slide, it starts to, I'll come to that next slide. But obviously it gives us an element where we have increasing EVs, we have increasing intensity of use, and all of the supply going forward needs to come from new sources. So sort of from the Cahill project being the primary one that we're focused on. Sometimes the concern that people have is, well, what happens if manganese becomes expensive and therefore its use might be reduced? We're also very conscious that currently manganese is the lowest part of the cost profile within battery chemistries. Typically the nickel and the cobalt, as you can see in those graphs, tend to take up far more of the cost. Lithium maybe less so now as its pricing has come off, but manganese, although it still makes up quite a large weight, it can be 15 to 20% of the battery makeup depending on the chemistry. It's but a fraction of the cost, and so obviously as entrants into this market, we're a huge advocate of higher prices for manganese, high purity manganese, obviously. But even in that, we're sort of very confident that any increase in the price that we might foresee is not going to be disruptive to the cost profile. And any thrifting, as it's called, where people try to sort of eliminate higher cost materials, is more likely to be centered around nickel and cobalt at this point rather than manganese, which those two metals obviously making up the bulk of the cost that goes into the cathode material. So what does it all translate into? I think most commodities, we often see these kind of graphs. I think this is demonstrates the scale of what we're looking at. Again, looking at 2030. Just so you understand the scale of the industry, in 2022, there was about 400,000 tons of high purity manganese demand across the world in production. As you can see, the scale of what we're looking at in terms of that growth, and this growth is determined by looking at the sale of EVs, the types of batteries that those would go into, where they will be produced in the world, because obviously some will be in China who will use Chinese materials, some will use, then there'll be the outside of China battery production. And so this analysis lends itself back to looking at what that overall supply and demand will be, and how the industry can respond. Obviously, China does have a capability and ability to respond, but what we're identifying is that the scale of the gap between what we see as the demand for these EVs and the actual ability of the industry to supply is big, is very large, almost 50%. I think they're 1.5 million out of a 3 million forecast. So that's an incredible demand sort of gap that we're anticipating. And again, it's leveraging off what we're seeing is huge growth in EV cars and the use of manganese in the batteries. So again, I started this by talking about when I got involved in the company and some of the reasons why I thought it was a fantastic opportunity and wanted to be the CEO of the business. That was the starting point I had. I've been involved in a lot of companies where the commodity rises and falls a bit. It follows different IP, but this is an industry where I thought, well, at least what we've got is a revenue line that looks like it's really going to sort of move in the right direction. There's multiple increases in value potentially. And so it was an exciting challenge to be involved, as well as obviously the opportunity to be involved in an industry that is instrumental in driving us in terms of the energy transition. I can't underestimate, the personal belief in us making sure that we do our part to help in terms of energy transition. And this is the bit I can sort of play in that, and my team in terms of helping in that regard. Talking about the asset then, so we've talked about why we think it's a great market, why high purity is the place to be. And then I'll just talk about the company and the asset. So I think first and foremost, obviously, projects are located in Botswana. That has a fantastic regulatory environment. We're very comfortable operating there, and we're definitely making a great deal of progress within the country. We own 100% of the assets and the projects there. As we move forward, the country also and the location of these projects benefits hugely from being close to South Africa, a big industrial heartland, economic base, banking, finance. So there's a complement here between the two. We have developed a process, and this is the key part of the business, is that we recognized, and my predecessor recognized early on, that there was an opportunity in high purity manganese, or to develop high purity manganese, and the identification of the resources in Botswana that are manganese oxide resources gives a cost benefit in terms of processing, and the ability to then design our hydrometallurgical process to move straight from the ore to the metal. That's not necessarily done in most other industry, in most other production of high purity manganese. In a lot of cases, people take carbonate material, which has to be reduced, and it releases CO2 in that process. And then often they'll electro-win the solutions that come out of that and create an intermediate sort of metal. Again, it's hugely energy intensive, which usually translates into CO2 units, and then to produce the final metal. So the target for Giyani, which is excellent in terms of its pioneering and pushing ahead with developing this process, hydrometallurgical process, allows us to go straight from the ore to the metal, which is an astounding and a great step. Therefore, reducing lots of the CO2 potential, and also hopefully giving us a cost advantage as we move forward. We're operating in a space within Botswana where the infrastructure is excellent. As I said, we're close to South Africa, have a lot of opportunities there, but also the project itself is close to a town that has good roads, access. We have seaports that are only a short distance away, so we have excellent use of infrastructure. And again, what we're also looking at, and I'll come to it in more detail, is more use of solar power, because we want to maintain the objective of keeping our CO2 footprint to its absolute minimum. It's very important that, as you can see there, currently we're 30% lower than the current supply, and most of that is out of China. And our ambition is to reduce that even further through a few initiatives, which I'll take you through. I've put the numbers there again in terms of what we think the value of the project is, and we did an updated study in July. So we revalidated our feasibility study from an updated mineral resource estimate. And again, you can see that we have a very strong base case and upside case in terms of our economics, $1 billion to $1.5 billion project. And principally, what you can see, that 57 years of life is very, very important. When you're engaging with offtake customers, it's very important that they see a longevity of a partner who they can work with, who is going to be able to set up for 20 to 30 years and supply material on a consistent basis into their engineering plants and car manufacturing. Very important aspect. To give you a bit of background, we originally had, in 2022, had a mineral resource statement. We prepared a feasibility study based on that original resource estimate. It was about 2 million tons of indicated material and about 3 million tons inferred. The feasibility study itself then was constrained by the resource and delivered about a 15-year life of mine. And one of the first targets I had of coming into the business was recognizing that we needed that extended life. We had done some drilling in 2022, and so what we did is we captured and we updated our mineral resource statement, and we're very pleased to come away with the fact that we now had tripled that resource. We then had 8 million tons of indicated and over 6 million tons of inferred, and a lot of the conversion of our inferred was good. So we're very comfortable that as we drill out more, we can probably convert kind of that material as we move forward. We then moved to look and sort of understand what the economics of that were, and that was part of the PEA that we put together in July and August of this last year, just to contextualize it. And those are the numbers that you saw on the previous slide. It gives us an idea of being able to extend the life, ramp up the project, and obviously have the ability to, since we have so much material, look more selectively in our mining profile to get the very best resource, the very best material that we can feed into our plant. As part of our work that we're doing in country, again, reiterating the ESG aspects, and the principal part of that is around very much our CO2. I think that if the core mission of the business is to deliver a product into the energy transition, we should be very conscious of not adding CO2. It kind of defeats the purpose of what we would be doing. We are currently in the process of, within our feasibility study, we had a 4.5 megawatt solar farm. We rely on the national grid in Botswana, which is fossil fuel driven, and so we do have plans to replace some of that energy. I'll give you a bit more detail of that in a little bit, in terms of how we look to reduce our CO2 footprint. But obviously, overall, we're running the project to the highest international standards, making sure we follow Equator principles, make sure we're operating to IFC performance standards. I think we're helped that in Botswana itself, the law and the environmental law is very close to the IFC standards. So we don't have that situation where we have a local law and an international law that sort of is different. It's very, very similar. So we can operate very comfortably within that framework. We have submitted our environmental impact statement. That's currently under review by the Department of Environmental Affairs in Botswana. We've had a process of backwards and forwards answering some of their questions and queries, and we're hoping to conclude that process very shortly and receive our authorization for the environmental project. As I mentioned, our ambition to reduce our CO2 emissions. We do have a plan in place where we've identified those areas of our CO2 emissions that we can look to attack and reduce. Some of them through some of our reagent use. Our reagents make up, as the slide shows, quite a large amount of our CO2 emissions, and so we are looking at ways to reduce that. Some of that is where they're imported, and so we have transportation and associated costs. And by sourcing those more locally, we can reduce that aspect. But also in time, we hope to produce or use less of those reagents and therefore also reduce that aspect. That might be a little bit more difficult to reduce because at the end of the day, we still need to use the reagents, but we're conscious of minimizing that footprint as we move forward. And then also ways of increasing the amount of solar and other renewables that we use in our energy for the plant. And we think there's a lot of scope there to increase our solar energy production. So that's kind of what's happening on the ground in Botswana. And then I'll just talk a bit about our process and processing. So we have this plant that is being developed in Johannesburg. We spent a lot of time working with the government of Botswana to agree that the plant would be initially constructed in Johannesburg. It was to be facilitated by the fact that a lot of the production and vessels and the materials that we needed for the plant were actually in South Africa, so there was a cost benefit. And the government allowed the export of 100 tons of material to the plant from Botswana, so we were grateful for their cooperation and assistance with that. And they're very excited to see us advance and develop this project. For those that are close to the sort of understanding of process engineering, effectively this is a hydromet where we leach the material. And the process in effect is that we dissolve the minerals, and then we spend the rest of the time trying to remove the impurities. In a lot of other mining processes, you basically try to recover the main mineral. So in copper, for example, you just recover the copper, and that's your focus. We kind of are approaching it and have a different way. We're actually removing the impurities step by step, and it's quite complex when we get into it. But what we're very conscious of with the plant is that whilst the way we're undertaking the work here in the plant is a new way of approaching the development of high purity manganese, each step within our process is very, very standard and well tested. So we've taken very traditional, very well understood processes that have been applied in a number of other mining or processing applications, and we've combined them in a way that allows us, in a bit more of a unique fashion, that allows us to sort of produce the product we have. So while we have that uniqueness in the overall process, the actual components thereof are not unique in the sense of they're very well known, very well tested, and we're very comfortable that the process in itself will work. We know it works. We already trialed it. We've done pilot tests. What we need to now demonstrate is that we can consistently produce this material in a continuous operating environment. We have the graphic there that shows the scale of the plant. I'll go through that. There's obviously and we might get questions on this, and we're more than happy to have members of our processing team engage with people if they want to get into the real chemistry detail. But as you can see there, in the plant that we have in Johannesburg, we have 100 tons of ore storage. And number one, the material is then taken, it goes to the milling and then the leaching circuit. From there, the material is moved through various stages of extraction that we have to go through to purify and eventually purify the solution. We dry the product and we filter it before we send it through to the crystallizers, where we actually create and crystallize the material and create these beautiful pink crystals of high purity manganese. The other parts of the plant obviously is where we're making up reagents and storing waste. In the case of the demonstration plant, we don't have a tailings facility, so we have the waste is removed. Obviously, when we build in the commercial plant, we will have a tailings facility that will be constructed at that time. Just to give you a sense of scale, as I say, that the length of that plant is about 130 meters long, and number 7, those crystallizers there are about 15 meters high, so about 5 stories in height. So it's a comprehensive facility. I think where we look at the demonstration plant as one of the strategic advantages of the company, and the importance of it can't be understated. This is a project or a plant that allows us to not only test our ore, make sure that the variability in our ore can be tested, i.e. taken through the process whereby product is delivered consistently. So that's the first part. So we demonstrate our process flow sheet. We demonstrate that we can manage the variability in our ore to consistently produce product. It allows us to preemptively create product and start engaging with the customers and the off-taker groups. That's a very important step. We have supplied material to them before from our pilot plants, but they were very conscious that a lot of this product can easily be made in labs, that what they wanted to see was a continuous process whereby we demonstrated that the process could deliver the quality and high quality specifications that they require. And that's what this plant allows us to do. It also allows us to go through our own process, look very carefully at where we can make savings, where we can make adaptations to improve the process, reduce costs, and then also inform our capital on how we can maybe potentially make capital savings or look at the overall capital of the plant. So it's a fantastic learning tool. It's a very much allows us to engage with the off-takers, and that's a process that can take quite some time. They have an accreditation process. They have to work with their end customers all the way through to the car manufacturers and OEMs who have very, very high and stringent requirements in terms of the raw materials that they apply into their vehicles. And that cascades all the way back to ourselves and making sure that we're compliant, not only in terms of the quality of the product, but also the other aspects of how the product was produced, what our CO2 is, what our ESG credentials are, how the business has been run and funded, and who our partners are. So it's an all-encompassing assessment, and that allows us to start that process very quickly in the early part of next year once we start delivering product to them. So the demonstration plant is a huge strategic advantage for us. I mentioned the funding that we had before in the introduction of the IDC. I think as an organization, it was a huge sign of confidence and that they'd gone through so much due diligence and looked to invest in the company. We have a convertible loan note structure with them, so we raise overall $16 million in rand equivalent, which will be drawn down, and we have a conversion that will happen later on at a future date when they convert and they can go into equity. So we think that's a good situation for our existing shareholders. We are very conscious that the current market is quite brutal, and our share price, we don't believe, reflects the value of our company, and so we're inclined to sort of try and make it so we could protect our shareholders currently in terms of the current situation they're in, and bringing in a partner the likes of the IDC who could not only invest now and help us develop the demonstration plant and some of the other aspects that we have in the company, but also be a partner with us as we move forward to the overall construction of the project. I think that's very important. Together with the other funding that we'll secure shortly, the other 10 million, the key aspects that we want to drive forward is completing the construction of the demonstration plant and commissioning it so we can get product developed and out to the customers. It's very important, and that's a priority focus for the company. We want to, through that process, as I mentioned, we look to optimize and look at our process where we can make things better, but also start with that accreditation process with off-takers. And alongside that, we will look to run our optimized feasibility studies. So we want to go back, incorporate all of the new resource information that we have. We'll do some additional field work. We'll add some additional drilling, some infill to get a better understanding. So we have the first 5 years in terms of our mining plan laid out in far greater detail to get to sort of measured resource sort of level. Finish off that, and then also incorporate all the findings that we have for the plant, so that when we get to the end of first quarter 2025, we're in a position where we have ideally have brought our customer base with us. We have a updated capital and operating costs in our feasibility study, which gives lenders comfort that they understand what the costs are going to be and the returns on the project. And we've also de-risked the whole project by demonstrating the process flow sheet and our ability to execute the project itself as well. That's sort of summarized in the schedule that we have. We look overall at our 15-month plan through to the first quarter of 2025. Again, a key element of this is the work that we do in Botswana. The permitting and licensing process is key. We're moving forward with an environmental license and authorization, and the next stage after that will be the mining license application. We have a process where government has been very supportive of the project. I think there is an understanding that this plant obviously can be situated in different locations, but we've chosen to place it in Botswana. It's a fantastic environment. The speed with which we're able to move and permit the project so far has been excellent, and that's a key component. I think people who work in junior mining sort of space recognize the true value of time as money. That the longer you have to wait for permits and licensing, the more the delays to your project. You have overhead. You need to be making progress, and losing time to permits and licensing is very problematic for mining companies. And so we're very sort of grateful that Botswana, we don't seem to have any of those issues right now. We're moving very fast, and the process has been excellent in terms of our experience. And we look forward to sort of completing our permits and licensing process through the early part of 2024. Concurrent with that, obviously the demonstration plant, constructing it and getting it into operation, getting all those learnings, getting product to customers. We've given ourselves 9 months to a year to go through that qualification process. We were very conscious that this isn't going to be quick, so we want to get the product to them in small amounts initially, and then we'll add volumes as we move forward. As they've tested it, they test with their customers, they come back with questions, we can generate more product for them, and then also run the plant on a consistent basis as we've commissioned it, so that we can then demonstrate the fact that the plant can run continuously and deliver product consistently. So that's a very important aspect. And the feasibility study. So we'll do some field works early on, and then we'll sort of start to bring in all of the findings we have. We're inclined to bring in a major EPCM group to assist us with that. The purpose being that when we come to the likes of sitting with lenders and investors to raise $281 million, that they would then have sight, as I said, of our customer base, the plant, and also looking and sort of seeing that we have world-class engineering groups associated with us that are going to help us with the construction. Again, an element of de-risking that construction finance and that execution risk, which I think is very important. We have some other aspects that we always keep our eye on. Is there ways to fast track the project further? Some early works or long lead items. We remain sort of talking with our own shareholders and ongoing partners through the IDC about some opportunities there. Those will come later in 2024 if there's opportunity and the project is moving forward well. But we've always got our eye on the future in terms of what we can do to enhance and make that project financing as smooth as possible and as beneficial to our shareholders as we can. A little bit of background there just on the company from a corporate point of view. Share price in the year quite flat, not sort of out of keeping. I think, well, maybe it was good in the market. The rest of the market seemed to go down, so it wasn't maybe, as they say, flat is the new up. It doesn't make you feel any better as the board or the CEO of the business that's not reflecting the value, and that's our objective in 2024 is to drive the business forward, and hopefully our shareholders will start to see the value of this business reflected in the share price. Very important, and obviously as we move forward, we have new investors coming in that will be on our share registry, and then also in time the IDC as they convert their convertible loan note and become a shareholder. It's very important. Management team and board. I think what I'm very focused on is making sure that we have rounded skills as a team, that we're able to manage each of the different aspects. So making sure that, in terms of our backgrounds, you see a mixture of people who have very strong engineering background. A lot of us have come out of major mining companies. We've kind of learnt our craft at some of the majors, and now we're deploying those into these settings. Some people can make the shift from major mining companies and then realize you have to do things differently in the junior space. The team that we sort of assembled, I think, can do that. I've worked with a lot of them before, so I know we can drive that forward. So we have good grounding in terms of the major mining companies, knowing how to do things, but then also have good experience in smaller junior companies on knowing how to move swiftly in a more entrepreneurial way. Also good experience from a finance point of view. My background is both mining engineer and also a financing background. So I have a mixture of both, which is very important in the role to be able to look across the breadth of the organization. But we also have experience with people who have marketing experience. We have people who have experience working in banking and finance, corporate finance, which is very important when we're fundraising and getting ready for our project capital raise. And then also, again, on the technical side, making sure we've had people who've worked in, the leading process engineering aspects, Tetra Tech, Johnson Matthey and the like. So a great deal of experience within the team, and making sure principally also that when we look at our ESG aspects, that we've got people who have run through these processes, have worked with the IFC and IFC principles, and IFC performance standards and equator principles, to make sure that we're moving in the right direction and we're compliant with those requirements. So that's the overall structure of the team. So I'm sort of coming towards the end, which is kind of the sort of highlights area of the project. And I think that it kind of sums it up. Is like we've got what we believe is to be a world-class project in this high purity space. We have one of the best projects in that regard. We're in an incredible country that's supporting us, that's allowing us to move fast in the project, which is very important. The market fundamentals in this area, I think there used to be a mantra, and I think we still have it in the presentation of saying that manganese was the forgotten metal. I don't think it's forgotten anymore. 6 months ago when I joined, people didn't really know about it. I think for those listening, if you Google a bit around high purity manganese, you'll see there's a lot of companies who are starting to look at it. They've got a bit of manganese, they want to know what to do with it. There's a lot within the battery space. Tesla's and the various other groups. GM has done some investigation, some deals. People are now looking at this, realizing that you can't build a battery with only one. You need all of the components to build those batteries, manganese being one of them. And I think the pressure is in that realization that as we have to build capacity outside China, when there's very little currently, the pressure will be on. And this could be the mineral that kind of delays things, because there is product of lithium there outside of China. There is nickel, there is cobalt, there is a lot of the other elements. But this is one where there is very little that's produced outside in the rest of the world outside of China. And it's the one that will come under the greatest pressure, I think, going forward in terms of trying to push these projects forward and develop them, which will be good for us, we hope, in terms of our pricing. It's probably why we're a lot more bullish on the price than maybe our customers might be. But we see a lot more supply deficit into the future than maybe our customers do right now. But I think that's coming. The process itself, we're very comfortable that the process works. We've tested it. Where the demonstration plant is not so much about proving the process, but more rationalizing and the reagent use, making it more cost efficient, and ultimately demonstrating it in a continuous process. As you go from leaching to the next stage, making sure that each of those processes is optimized. So ultimately, when we build the large plant, we invest $281 million. We don't want to then have to learn how it all interacts. We'll have all of the data, all information, and we'll know. So it'll mean in our feasibility study, I think we still use 2 years of ramp up. That's a very conservative view, and that's fine. I think once we've learned and gone through the demonstration plant, there's a very good argument for us being able to reduce that, because we should be able to ramp this project up a lot quicker than that in terms of its recoveries and production. So that's very important. And the last element, to do have some exploration upside in the business. We have a large land package, 2,000 square kilometers to investigate. We've only investigated a bit. It's because we have so much material. It's not our number one priority, because our number one priority is obviously a demonstration plant and getting product to customers and taking that forward. But we do have some other opportunities within our exploration portfolio, which we will look to test through 2024. I think that kind of concludes the bit I had to say.
Danny, thanks ever so much for updating investors this afternoon. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. Just while Danny takes a couple of moments to review your questions submitted already, I'd like to remind you that the recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet company dashboard. Charlie, Danny, as you can see, you've had a number of questions from investors this afternoon. If I may, just hand back to you to read out those questions, and I'll pick up from you at the end.
Thanks, Mark and Danny. Great run through there. Let's crack on. There's quite a few questions, so let's get going. So first one, fantastic presentation, Danny. Really good to see what you've accomplished in the first 6 months of you being at the helm. Can you give us more information on the optimized feasibility study? I know you did a feasibility back in 22, and there's a PEA this year. Can you give us some more information on what's it going to build on, and what's it going to use as its basis?
Well, thanks for the recognition. We've got a long way to go, but in terms of the optimized feasibility study, yes, we build on the base that we had. I think this is an odd process to go through, but I think most companies in this battery space probably have to do this. You have to demonstrate to a feasibility study level, like we did, that you have a project, you have a process flow sheet, you've got the mineral resources, etc. to then create, I would think, the environment in which you can raise the money to then go the next step in terms of building a demonstration plant. This is an expensive undertaking. If you're in copper and gold, you probably don't go through this process because you're just producing a product that you sort of put at a terminal market. Whereas here we have to engage directly with our customers. So the development of demonstration plants is part of the battery space. It's a reality. And so we need to go through that. And so what we do is we take all of the information that we had in the feasibility study, cost-based data, process flow sheets, and we'll incorporate that and update that based on new information from the demonstration plant. Very important that we get that feedback in terms of reagent usage, areas where maybe we thought a vessel size might be X and now it can be smaller, or maybe it needs to be bigger. Better to know that now and include a slight bit more capital up front and know that the process will operate better in the commercial plant. So we take all of that. We've got a bigger resource, so we can do a bit more optimization, making sure we get the right feed, particularly in the first 5, 6, 7 years of operation, making sure we get the best quality feed at the right time into the plant, optimizing that. So it's that feed from the new resource statement, the new demonstration plant information, and also we're looking at some tax opportunities within Botswana. Obviously, this is a huge project within the country. It's an opportunity for the government to have a downstream beneficiated plant in country. Lots of countries want this value add, and that's what we're bringing. And so the country is very much focused on making sure that this project is developed successfully there. So there's also some economics that we can bring into that optimized feasibility study.
Thank you. Another question. Great result with the IDC last week. That's fantastic to hear. Are they going to be of use in any potential project financing in the coming years?
I think so, yes. I mean, that was part of the rationale of their investment. I don't think they're just looking to make a smaller investment or this scale of investment. They very much have an eye on the larger plant. They have a bigger strategy in Southern Africa of developing battery metals, the full chain downstream within the South African car industry. So I think they want to be involved in making sure this project is developed. We're one part of the components that are needed. So yeah, I think that's that. Well, and then in discussion with them, that's that they're a long-term partner and want to be involved in our next large fundraising, I would imagine.
There's a couple of questions around the plans in Botswana. I know you've been there recently on quite a few trips, engaged with the mining minister. What are the plans to incorporate local businesses or skills transfer in the local community and the surrounding areas in Botswana?
I'd said, it's a huge priority, and that's the benefit of this. Firstly, we're taking ore and we're going downstream with it. So we're not just creating an intermediate product or taking the ore offshore sort of approach. We've made the decision to build this facility in near Kanya, near the town. So that's the first important step. We're doing this within country, and then there's a lot of and we've been working within the Ministry of Mines and talking through different aspects of this, of how we go through this empowerment, the citizen empowerment sort of process, where we want to make sure that firstly Botswana has fantastic mining skills, geology, and making sure that we're using all of what is there already and building on that. So we don't need to bring in outside skills for jobs and that are already well supplied in country. There's some elements, and we say up front, that around this process that are very unique, and so we will need an international presence a bit in that respect. But finding people who can manage finance, law, and those sort of things, again, are very much a Botswana focus in terms of that. But then also we have very much a focus on local procurement, where we can obviously make sure we buy local and aspects and bringing those into the business. So hauling, even some of the mining, we might look at contract mining sort of opportunities there. And reagent replacement. We're conscious that reagents cost a lot. They're being imported from different places. And there is opportunity to potentially look at import substitution, where we wouldn't look to build these facilities, but we have spoken with a couple of groups who are very focused on, if we would be the base customer for these reagents, they would use raw materials in the areas to create these plants and supply us with the reagents. And that would be fantastic in terms of more jobs, more input into the economy, more skills development, all those sort of things. So we're hoping to create that multiplier effect through this project.
Fantastic. There's a few questions coming in about the processing route. You touched on it earlier that whilst the elements involved are sort of, commercial normal scale in industry, but the way they're put together is unique. Is there any potential to protect the IP, and also is there any viability to recover other elements along the process route?
So yes, we own the IP. It's we're working closely with an engineering group in South Africa to develop the plant, Met63. The IP is ours. It was developed with ourselves in consultation with other engineering groups, but it's ours. We have investigated ways to sort of legally patent and these sort of things. But I think the other side of that, we've spoken to other technology groups, and that's what this is. There's a mining element to this, which is more the traditional sort of mining aspect, but we're very conscious we're going into an industrial sort of technology business. And the advice we have received from a technology point of view is the best way to protect technology is move faster than your competitors and stay ahead. And that's why, we move very quickly to develop the demonstration plant. We want to push these things forward. Raising $26 million is quite aggressive in terms of, our market cap and where we are as a business. But I think the fact that, groups are coming in and funding the 26 million and driving this forward is a recognition that there's a huge value in being, first off the rank and building these things. And I think we can all recognize that building the commercial plant and getting that accreditation is also very important. This is why the expansion that we're talking about is not just pie in the sky, like let's for the sake of improving our MPV. What we're very conscious of is once we've achieved and found the customer base, they're comfortable with us, we've accredited, the ability to maintain market share is very important. So the ability for us to grow our business and be that supplier of choice, I dare say, is very important. So again, 57 years of life, reducing that to 30, which is still a fantastic period of time. Having more resources that in time we can bring into the project if we require, and being able to continuously grow and meet the demand that might be there is an important part. And again, that's about being one of first or second in, to develop and sort of corner as much of the market as we can.
Great. I want a question on the market now. So why is manganese hasn't had the same uplift as other battery commodities, and what are the key factors that will contribute to the direction of the manganese market going forwards?
I think historically it's been a bit of a byproduct out of a lot of the Chinese or the factories in China that create a multitude of manganese products, one of which ends up where they create Electro 1 manganese, which is the high energy intensity manganese that I mentioned before, and then they dissolve it and they create the high purity manganese that goes into the batteries. So it's been within that sort of system, and also what we've seen, and there are prices that we've looked at in China, is very much an industry that's been kind of run at a loss. It's overproduced sometimes in China, so the pricing is very low. And there was recently one of the largest producers of high purity manganese in China actually is going through a bankruptcy. So we're realizing is that there's been this, I don't know, through maybe we all went through a period of cheap money in the world, and maybe there was an over expansion, over exuberance in terms of that, and there's been therefore this depressed price even within China. But I think the recognition is that the price that we're looking at is not driven by China. The price that we're looking at is about, if you take the European numbers, the Europeans want 65% of material from one supplier, but that means 35% needs to come from another source or other sources. Now, in an environment by 2030, where we could need as much as 1.5 million deficit or 3 million overall tons here, you're talking about you need an industry that could be somewhere between 500 and 1 million tons of new production that doesn't exist today in the rest of the world. Our project is 70 to 80,000. So you need 5 or 6 potentially Giyani projects to come through to start meeting that demand. That's how big this gap is. And so when we look at it, we sort of see the positive opportunity within the market in terms of why manganese and why has it been depressed before, and why does the pricing have to improve to sort of get these projects going. That's the sort of scale we're looking at, and you don't do that by selling product below cost. So even in China, the price will have to readjust, but I think we're looking focused more on what do you need to drive all these projects forward. And our view is that pricing is higher than what it is currently.
Great. Another question which is related, so I'll just go into it. You've worked in other chemical and mining sectors, and the manganese for batteries is very opaque. What have you learned about the sector in your time thus far that is the most misunderstood and or interesting?
The most misunderstood. I think the fact that the chemistry is complex and the chemistry is still being determined, I think is the bit. It's not, as I put on one of the slides where you could see all the different chemistries. I think there's a process that the auto industry is going through where they're sort of looking at the cars they want to design. They then want to know what battery goes with that car. And they're still going through a bit of an evolution there in terms of settling that. And so that does make the process, and it's part of why that we're creating a plant that can create all of the product streams. So we want to make sure that we can deliver a product that can meet many different specifications of high purity manganese. The overall product can have different specifications, and we want to be able to make sure that we can maximize with each of the customers so that we can match into as different engineering and car companies go into different chemistries, that we can make sure that we're supplying into their supply chains on that basis. I think that's the bit that's maybe, it is a complicated sort of business. It's also unusual that you get the end user, like the car company, making its way to buy mines and being involved in mining companies. We've seen a number of deals, both in lithium, both in manganese, where Tesla or GM or one of the mining, Stellantis, we don't see them necessarily owning, I don't know, copper and nickel mines, but for some reason they've come in at this level. So that's also an unusual aspect. And for good or for bad, I let other people make that determination. But it does bring a lot of activity and a lot of focus to the sector. So that part is very good. So that's been a surprise as someone who's worked in other commodities where you just kind of as a miner or mining company, you deal with your one customer. Here, there's a lot of the other downstream parts that are coming back into the business.
Brilliant. I think we have time for probably one, maybe two more questions. So a bit of off-taker questions. So how are conversations with Giyani going regarding off-taking? Are they being influenced by IRA requirements? Will there be a premium pricing? What's the regional breakdown of off-takers you're speaking to? China, Korea, Asia, North America, Europe, and when will samples be ready for these customers, off-takers, for testing purposes?
Yeah, so the short answer is we're looking globally. So we talk to potential customers in Asia, that's Korea, Japan, and then as well as in the EU, and then into America. So we're focused across the board. We know that in America, with the IRA Act, there's a huge amount of development. A lot of those plants haven't been developed yet. There's a bit of those plants in Europe and a bit in Japan, but they're the product. So you have to go through this pre-cam and then this cathode factories that develop the batteries. So they're being built and in construction in the US. So the IRA is drawing that. And I think what's important for us is a lot of people have asked us, are we IRA compliant? Because IRA requires free trade agreement countries. But we are also aware that within IRA, there is also an element where, firstly, you mustn't be a foreign entity of concern. So firstly, our material going into a battery mix in America, for example, doesn't disturb the credit that might come from those products, because we're not a foreign entity of concern, and nor is Botswana as a country, nor is our company. And then also there is a caveat within the IRA that looks at the value add. If value add is made in North America, and a certain portion of it, more than 50%, then that still allows those materials to qualify for the IRA incentives. So we're looking at that and making sure that, and to confirm whether our value add is greater in North America if we were to sell product there, in which case we would look to potentially be in a position to be, firstly, we might even qualify already for IRA. So we're looking at that quite closely. But overall, we're not an entity of concern. So our product going into that mix is already very, very useful, particularly in an environment where if your alternative is you can only buy from China or from us, you're going to have to buy from us because there's going to be restrictions on Chinese supply.
That's Perfect. Charlie, as you say, you had a number of questions from investors, and of course, any further questions or any questions that you haven't got round to, I can make those available to you post today's meeting. And of course, we can add responses where it's appropriate to do so, and then we'll notify investors on the call that they can review them. Danny, thank you very much indeed for your time and for updating investors. I know investor feedback will be particularly important to you, and I will shortly redirect those on the call to give you their thoughts and expectations. But Danny, if I may, before doing so, just ask you for a couple of closing comments just to wrap up with. And then, as I say, I'll redirect investors to give you feedback.
Yeah, I think it comes down to market. As I've mentioned, we're in the right market. It's got so many fantastic aspects to it. The high purity combined with the EV market, etc. We've got a great project, $1 billion plus value, and we're in a great country, and we're cheap in terms of our share price. So I encourage people to look very closely and sort of see what value you can be buying in terms of our share price compared to the underlying value that we have. So we look forward to engaging with people in due course.
That's great. Danny, Charlie, thank you once again for updating investors this afternoon. Can I please ask investors not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the company can better understand your views and expectations. This may take a few moments to complete, but I'm sure will be greatly valued by the company.